think there's some in our channel that I don't have. All right, guys, I think we'll go ahead and start with the agenda for today. So let's just look at the agenda that we talked about in that. So we'll do the 30-minute TOS setup, meaning importing studies. A lot of questions I get is how do I import the studies, adjusting the settings in TOS, whether it's study related or any other settings you might have. Setting up an options watch list along with the active trader to hook it up so that way you don't have to flip screens. And then just some quick shortcuts, and if other people have some other ones, sure, you can share it. Not sure if Sequence is on, if he's going to be covering the trading view setup. I can also do it if you guys have questions. Then I'll kind of go into the clouds because there's a handful of new people. You know, last week we covered the orbs, the POCs, and the VPOCs, and I think this week we can add, you know, knowing what the clouds are and the levels and the importance of them and the strength of the clouds, and how do you plot that on your chart so that way you're not surprised when something rejects a level that you haven't seen before. It's probably a cloud or a VPOC that's around. And then if people need help with fibs, for the most part, you know, the way we play the fibs and the orbs, those are the intraday fibs and probably the most accurate one you can use during the day. But if people want to know higher level fibs, I'll go ahead and show you how to find those as well. So that way you guys are kind of a little bit better at finding these things and looking at the bigger, smaller pictures and knowing how to go about it. So with that being said, when somebody shares a link with you, a TOS link, right? So we have a section here for TOS studies, right? Let's say I wanted to find this study here, daily SMA levels. All you have to do is copy this link. So once it's copied over, you will go to setups, open shared item, and then this little bar that you have here, you'll highlight that, you'll click on it, and you can either paste it or Control V. I believe Control V is the best. And then hit preview. And what I usually do, even on this one, I would just type in Shorty, EMA, SMA tags, and then usually I'll add something like shared or something after, so that way I know whether it's mine or not, like did I really write it. So if I look at this one here, I'll just import it. And now this study that I imported is part of your account, meaning wherever you log in, it's going to be part of your, your account. So if you go to studies and you click edit studies, and then let's say you type in Shorty, and you can type in whatever you want. See, Shorty, what did we save it? You just remember what we save it as too. So like here. Okay, here's that one. And if I wanted to add that, I would double click on it and then it'll show up here. And if you click on that, we just got it right here. You have the EMA, I believe these are daily levels, and this gives you the EMA levels without you kind of flipping the levels over here. Irrelevant what the study is, I just want to make sure you guys know how to import it. Hopefully this gives you a little bit of clearing on how to import links. And if somebody gives you code, let me see, I think I was working on something with Sequence not too long ago, and he sent me a bunch of code that he put together. So I'll just go ahead and copy it real quick. Okay, I'm sorry, I'm trying here to copy the code and it's not easy. So if you just get the code somewhere, let's say it's not mine or whatever, if you click here and you click create, and this is, I will call this PDC 4 labels, PDC, PD low, PD low, and then pre-market high, pre-market low. See if this works. So it looks like it's working. So now if I go to pre-market data, just to make sure it's turned on. So here's this study now that, if you guys remember, we talked about having the previous day high, close, and low, and having the pre-market high, as well as the pre-market low. And that's, I think, what he did here. Maybe not the best to do on ES. So yeah, here's the pre-market low, pre-market high, and then we have the previous day high, PDC, PDL. So it kind of makes sense here. Okay. I'll share this code with everyone in our studies, and you guys can practice importing on that. Any questions on importing so far? Code or link? All right, great. The next thing that we're going to talk about is once you import a study, sometimes your price action or candles kind of get squished, right? It would look like almost like it looks like this, and you really can't tell what's going on. What you have to do is go on settings, go on price axis, and make sure that the fit studies and fit study markers is unchecked. I checked it here just to show you, and look what happened to the price. Basically, TOS has some setup in the background where it thinks it knows what it's doing, and it'll kind of, you see how it still looks bad. Even if you zoom in, you just can't get it to work. If you click on this, you click price studies, uncheck these, and boom, there goes, it changes. So just make sure if you're loading studies from me or elsewhere, your price axis, that you want to make sure that these are always unchecked. If they're not, you're going to get that squeezing, and you will not be able to kind of trade and see stuff. While I'm on it, here, if you guys are, if you look at the chart here, you see how between my section, the price or price here. Let me delete all of this. We'll redraw the level later. So let's see. And then another thing I like to do on this PDL study here, this one specifically, is this. I just removed those lines. Let's see. You see how I have the spacing between the last candles and the screen? Sometimes when people post screenshots, they're struggling with this. So what you can do is you can do it two ways, right? There's on the bottom, there's little two arrows. You can click on that, click on change right expansion settings. You can change this according to your screen size. Right now I'm on, I believe, 34-inch screen. I don't know, maybe 27. I don't know. But play these, right? So if I change this to 0 and I click apply, you see how the price action is literally hugging this, and you don't even have any room. You want to draw trend lines or just kind of see it. It makes it more difficult. So if you click on this, you increase it to, let's say, 25, start with something like that. And here you go. You get a little bit of room, and now your labels, if you have any labels that need to be called out, they will be showing. And the same can be said if you have the TOS orbs, right? So if you look here, here's like with the weekly pivot, here's the daily pivot on SPY. Pre-market, we hit it and we come back. But if I change these levels and change expansion, let's say I change this to 0, look what happens to labels. I no longer have that weekly label, the daily label, because it needs space to generate those labels. So if you have any studies and you're not seeing the labels, well, maybe just increase this. And here it goes. Now you have the labels back. Okay. So that's one of the tricks that I use as well here. Another one is when you go to the equities. A lot of you guys have been asking me, hey, do you trade with the extended hours on or off? Well, the more and more you guys brought it up, the more and more I started testing to make sure that the levels are not drastic changes. But if they are, and I see that level with the hours being extended hours being off are being respected, then I will gravitate towards using them without it. Right, especially on the VWAP, you want to make sure that at the start of the day that you don't use extended hours on, because you will see the skew in data that looks like this, right? So If I do this, watch how the VWAP will change a little bit. So you want to make sure when you're, trading in the morning is that you want to have the VWAP. You don't want the extended hours on. You want to have the regular hours on. And the way I came up with it, and there's a shortcut for it. If you click on equities, and there's this little arrow button here. If you click these here, what happens is that when you go to style, you see how quickly I can turn them off and on now. I can take the hours off. I can click them here. I can highlight it, unhighlight it. I can show off the studies. I can take it all off. And now I just have a blank screen, right? Besides these labels, you don't really turn them off. But with the click of a button, I'm able to do that. And here I just lost one of the settings while we were doing this. Kind of weird. Okay. Anyways, I just lost one of them. I had three. So here I can kind of flick show extended hours trading session and don't show the trading session. So let me see. If I go here. Okay, there it goes. Highlight. So this one highlights it. This one removes it completely. Does this make sense to everyone? Like why I'm kind of doing this?
Yep.
Yeah, it just makes it easier for me to kind of go through it, right? And then another thing that I did here, a lot of you guys probably go to the drawing tools on the bottom, or you right click the mouse and you get these drawing tools. Another thing that I found, I don't know where I found this, you can pin this where I have the trend line, the text note, if you have simple moving average price level or fibs. If you want to fib this out and you want to know where is it going to bounce. These are some of the ones, the quick ones that I use, and I can quickly utilize it and don't really have to go back to, drawing or right clicking and picking. I can just have it on my chart here. If I want to add a text note, I can do that real quick here. So for this shortcut, I believe this one is a little tricky because I did not study it. Oh, right here on my tools, you want to click on each chart. On this one here, and when you click that, you'll get this option here. And then if you click on this, you're able to add more buttons that you want. You can have a drawing tool, you can have a study. If you want to have any study that you have, or a study set, like I have a couple of study sets. And then if you have any styles, I can really quickly apply any of my styles here. Like, I supposedly have a white background. If I click on that, it'll apply white background, but I won't be doing that. Trading live, I have the 9 EMA plus the VWAP study. So it kind of gives me the ability to quickly, let's see if I want a rectangle here, we just added the rectangle. You click the done and the rectangle stays. And now these are basically pinned, or you can kind of hover over it and they can come back. On some screens I have it pinned and some I don't, but it helps me with the speed and, not relying so much on multiple clicks. To me, it's very annoying when I have to, if I didn't have a mouse that had the middle button, this becomes very, very, very useful here. Any questions so far on how to set these up? Hopefully you guys are kind of following along and I'm not going too fast. Okay. Let me touch what else you said. Setting
Hey,
up.
Shorty.
Yep.
What time do you usually turn your extended hours back on if you're charting? Like you've turned them off.
You usually need about 30 minutes. That's a really good question. I was hoping somebody would ask you. The VWAP needs about 30 minutes to settle in. You can turn it on after that.
Cool. Thank you so much.
Yep. So the watch list. So you guys know I have a momentum scanner that I got from my previous group, and it was really good. A guy that in that group was using, and I use it as well. It's basically just a change in volume, and then we use the high and low graphs. Nothing proprietary about it, but I use a watch list just to see what's jumping up on the volume and on the radar. The second watch list that I have here is basically a watch list that I created. So to start this, you would click on, here, you would click add watch list. And some people have multiple watch lists, right? You see how the bottom one came up now. You can change this watch list. if you edit this default, you can say swing option watch list. Let's say options watch list. So if I click this, I'll do that. And now this guy's up here. And if I really wanted to, I would just kind of delete these out of there. I don't know if there's an easier way, but just one by one probably is good enough for me.
Actually, if you click on the swing options watch list and go to edit swing options watch list right there, down there. And now you can highlight all of them and then remove symbols. Press down shift, like go down to the bottom. Click one and scroll down, hold shift. Okay, now go to the top and hold shift.
Oh, I see it. Thanks.
And now just remove.
Okay, perfect. There, I learned something new. That's how we're doing this. So now what I do is, so let's say I wanted to link this. You guys are familiar with linking, right? So everything that I have here is the charts wise is on red link. You guys see it here. What I do for my active trader on the bottom right is I link that to a yellow, or you can pick any color you like. So let's say I pick this to a yellows, right? So now anything I put in here or I change here, you guys see how this one is changing. And I'm on my 1K account here. So I have the positions obviously here. You see it. If I was to click on this, we are on, what is this? SPX 30 calls. No, 22 calls, and I'm able to see this just by clicking. There's 30 calls here, there's 22 calls here, and I'm able to quickly adjust this and see if you care about the profit at that time or whatnot, but we're able to see that quickly just by having the watch list linked here, and you would be able to see the bids, you'd be able to see the ask size, the volume, so you know what are you getting. And here, I usually keep a chart. The bottom here, honestly, I don't even know why I have it. The MACD divergence on contracts really does not help at all. So you can keep this or not. Let me see. Overlap volume is good. I don't know why is it. Oh, the study there, 5 sell volume. So you can remove this to get a little bit better chart. But that's linking here. So we created the options watch list, the links to the active trader, and I'll help you guys set this up as well. So now if I go on trade and let's say I pick up Monday is the 14th. So let's say we're like, okay, well, they just released some news that Ukraine's making progress with Russia again. So expect the market to explode again, only to be Putin saying that there's no news, progress, or whatever, just a typical game that they're playing. Now let's say we're like, well, we're going to play Fort 15 for the day. I'm just throwing these out. I don't know if these are correct levels to be playing yet. And then you can sort these any way you want, right? I usually sort it by name so that I have puts and calls together of the same symbols. And then if I wanted to, and I think there's another way to do it. I think there's a way to add to watch list. Oh, here. I think you can swing options watch list, and I don't know if that worked or not. Sometimes it works, sometimes it doesn't for me. So what I usually do is I'll just copy it and I'll click paste here and I'll just paste it in there, and then it's still sorted in the same way. And then if I go there, I can, kind of look at the contract itself, right? So these 424 calls, you're able to quickly scan. This is something that Earth is really good at, using options, right? Pricing them themselves. So you guys see that this contract is fairly new. And went to the high of 18. Right now, hit the low of 155. So you get an idea like what you're buying, right? So that way you're not really buying like the top on a day, right? And that's why I look at that stuff. And then, believe it or not, what I just did, I created a small fib, which we'll lead into later on in the class. And it works on charts as well, on options charts. When they hit these levels, you can expect certain bounces here. We're off by 3 pennies. And then the next levels, obviously, you can't go below 0. So don't expect it to go -3. These are retracements tools with small extensions. So far, so good on the options creation and pasting. Does everybody follow so far?
Yeah.
I want to make sure others follow. I know you got it. because this is your bread and butter when you start executing orders, guys. What I'm showing you right now, there's probably not a video on YouTube right now to set it up this way, and I've never seen it. Maybe there is now, but when I was trading, everybody did this. Click this, buy, whatever, single. Then you come here, but now you don't have the chart. Now you're playing with the price here. Is this what you guys used to do? I mean, I don't know. I'm just asking. I've never done this.
I used to buy that way, but always from a watch list before I used Active Trader.
Yeah, and I mean, it is tedious. So right now, let's say you click confirm and send, you probably won't get a fill. Then you're like, it's on the monitor, it's on a waiting to fill, and you're like, damn it, now I got to go cancel and replace. By the time you cancel and then replace, you just lost 20% probably on a trade. The way SPY moves and how I preach on trading, playing the bounces, playing the retests, that's a matter of 20 to 30% difference between you and somebody else that's using Active Trader. So I strongly recommend that you start using it. Okay, how do we set this up, right? So I'll start one from scratch. I don't want to mess this one up because I have to basically redo it. So I'll go on the flex grid here. I have a bunch of screens. So we'll set this one up here. So here's this one. It's a regular chart right now that I use for SPY. We'll kind of change it and bring it back to life. So what first thing you want to do is on the right, right here, there's something called Active Trader. You want to click on the Active Trader. And then the second thing,
really fast, you might want to show how to turn on that sidebar in case people have it turned off. So, so right below on demand, there's an arrow pointing to the right. So upper right corner.
Oh, okay.
So
this one.
Yeah, now to the right of that, the little grid, click that. And then click on customize grid. And then see how it says sidebar?
Yep. Oh, this guy, yeah.
So that's how you turn that on and off so that you can turn on and off your Active Trader.
Oh, perfect. Well, mine was always turned on, so I never had to turn it on.
Yeah, but some people might not have it turned on.
So. Yeah, that's true. So what he's saying is if you go here, if you click on the custom size grid here, so I use flexible grid. As you guys know, many of you guys probably use flexible grid, but flexible grid is another way to chart, right? So you have your charts, you have your flexible grid. The flexible grid, you can kind of customize it. If I wanted to add more charts below this level here, I could basically do that. I could click here and I just added a chart here on the bottom. I'm not going to do that, but if you click on the sidebar, it basically enables that Active Trader here, which is good to know. I guess I didn't even know you do that here. So if we go back to SPY, Active Trader, if you click on that, this is your Active Trader screen now. And now if you click on, there's two little gear icons, right? If you click on the bottom one here, you click on Customize, you can add certain columns here. I usually have P&L open here. You don't have to have it. I suggest you don't at first, so you get comfortable trading on the levels base, not the profits base. A lot of you guys see your P&L going up by $100 or whatever, and you freak out and you get out. You should really be taking profits at the levels, not necessarily off of your P&L. And for me, this is pretty much the setup that I have. The volume, the buy, the bid size, and then, I have the P&L. On the top, you can change these settings, right? So if I link this to the yellow guy, here's the option 424. You can change, even these increments you can customize, right? So I believe if you go on setup and you application settings, and then you go on your order defaults, and you click on options, you can default quantity orders here. You can change this to whatever you want it to be, 2.5 order quantity increment, like how much is it every time you click this, how many does it increase by? You can change that here as well. If you're on a smaller account like I am now on a 1K, you really don't need 20, 40, 50, 60, 100, 200, like might be my setup on a different account, but you want to make sure that, you have a quick, 1, 3, 5, 10, 12, depending on what we're doing and how we're trying to grow the account. But that's where you can change this. I'm not going to go into hotkeys, but you can do the same for stocks. When I had a SPY on, there was like an increment of 100, and then you guys don't trade futures, so you don't have to worry about that for the most part. So the active trader's on, right? Typically what I do is I have the auto send on. I don't know, many of you do that. Catching Rockets, do you do it as well?
Yeah, I have auto send on.
Yeah, for me, active trader would be useless if I don't have this on. What that means is when I click a buy order here, it's basically going to try to execute immediately. Instead of getting a little confirmation box of how much commission is going to cost and your buying power, I don't know what all they include. They include like a little bottom right message, and you have to click another button to confirm. For me, that's too slow. I click the auto send. When I click, I want to buy it at 183. It basically just executes it. And just a trick, when you're buying options, let's say I want to get this contract. I wanted to get this at 155 when it was dropping. What I would have done if the highlighted here is the market buy. If I click market buy, you guys see how it's highlighting to that color that's highlighted right there at 180. You do not want to use market buy as much unless it's something like SPY or Apple or something highly, highly, highly liquid. On Shop, if you do buy market, what I did when I started, I clicked buy market. I think it was 10 contracts. I literally lost 60% of that value as soon as I clicked buy market. And it was like $4,000 literally gone just by clicking buy market on Shop. They pulled the rug on me. Somebody filled in the market. They sold one and they filled me for 9 more and then they dropped it back down. So buy market should not be used, right? You do not want to use this. So you want to use the limit, and you see here, I'll teach you a trick. You see how here it's kind of showing you a stop. You can place a stop buy here on the left side. What that means is if the price starts going, right, insanely, you'll get filled around this price anyways. So it's basically like a stop buy. If it goes above, I'll buy here. You can also put, a stop loss, of course. Let's say we were profitable in a trade. Let's say this one, we bought it at 155. Let's say we bought it here, or 166. So you bought at 166, you're up $14. You could put a stop loss, let's say here at 1.74. And if the market comes to 174, it will fill it. Okay. And market makers do see these levels that you're playing with. They do see the levels that we are placing them on, and that's the power of being a market maker. They see both sides of the house. Okay, if you go, within, I believe, 2 strikes above it, you see how it changes automatically from limit to stop. Sometimes active trader will play a trick or a glitch, and you think you're putting a stop loss here, but you're putting a limit order. Okay, it happened to me multiple times, and it still happens just because of the speed that we trade in. I'll put like, hey, I'm going to do a stop here, and it was a limit order. So what do you guys think happens if the current ask is 180 and I'm like, no, I want 160 for it? What do you think the buyers are going to do?
You're immediately going to get filled.
Oh, you get filled. You don't even know like the speed that you're getting filled. For market makers, that's $20 on the contract, and they're like, thank you. And instead of you putting a stop, you hit a limit, and basically just think about yourself in a flea market. Everybody wants oranges and willing to pay 180, and here comes Shorty, and it's like, no, man, for my oranges, I want 160. Well, all these buyers are like, okay, fight. We want those oranges at 160, so you get filled.
Really quick.
Really
quick, Shorty. As long as you have buying power, you can place orders right now. They won't fill. But you can show people how you can click and drag the orders and stuff.
Not on this account will I have buying power much.
You can try.
Yeah.
And if you have a swing, you can show the sell order side.
Okay, well, here's buy. Nothing happens. If you want to sell, you will put a limit here. Okay, well, I didn't know you could do that.
Yeah, so you can just show them how you can click and drag and everything.
So here's the stop. If I want to stop, let's say I bought these for fun. I think I had $21. That's why I know I don't have any more buying power. I bought these. If I wanted to move this up, let's say to be 0.8, and I want to make $1.47 on this. If this market comes in here, basically it would get filled. And let's say if I want to drag it down, and let's say this price is moving, you can literally just drag it down, and you see how It's going to give you some rules, right? You're going to learn.
Well, you can't move a stop.
Above the current mine. Yeah. So that's how you can drag these on both sides. If you click on buy here, and you can literally drag this. Let me go on the other one that had a little bit more range. If you click, you can put a stop here, and it'll basically stop buy, which I enough. Okay, well, I don't have.
Because you don't have the buying power right now.
Yeah. So if I wanted to, I could put a stop buy here. If the price starts going up a little bit more, that will get filled. If I want to put a stop loss, let's say at 120, you could definitely do that. And then if you want to change, you could have multiple stops, right? As long as you have a number of contracts, and on here I have 11. So my average on this is, let's call it 90 cents. So 11 times 90 is about 1,000. That's there. So a lot of it's consumed in this trade as I mentioned to you guys in our Discord. I'm going in heavier on this. I was anticipating a little bit more sell-off coming into Monday. So the goal would be to sell these around 160, 170. That's where I would have my, limit sell here as soon as if it, comes to those levels. I will place my sell orders here and basically look to double this account from 1 to 2K. But that's how I use the active traders. You can sell the limit, buy the limit. Then there's also, you can use the OCO brackets. We're not going to cover all of that. I think it's the best to do it live. When actually price is happening, we can find some cheap contracts we can play with. You can have the ask bid here. Usually what I do is I do the last. Then you can do percentages, or you can do the price, right? $10, you can do a buy order or sell order here. Let me see if I do this. Okay. So if you do this, we'll cover it live where you guys can learn about the OCO brackets to kind of figure out how it works, right? I don't know that I had a buy order. Okay. Any questions on this so far? But this is your bread and butter for trading quickly and efficiently as you're watching the charts, right? So now,
really
how
quick,
do I do it?
Shorty, can you go back to that screen?
Yep.
Like your active trader. So can you just click the gear icon so they can see your settings?
Yeah, hold on. There's a chart. Which one? This one?
That
or
one,
this
yeah.
one?
The top one. There you
Yep.
go.
So here I have the buy, the sell market, cancel, reverse, flatten. You will probably never use reverse or flatten until you get a little bit better. I don't really use them. You can remove them. Quantity with buttons, that's here. You want to kind of keep that. Order template, that's here. Auto send off, that's important. And then order template editor. I don't know which one is that.
I think that's the one that lets you choose OCO and all that.
Okay, yeah. So this is all I keep on that screen. The buy market I do use in SPY if I see that we're going to get like a quick flush. I think I used it on Friday when we were trading SPY, when I kept giving you guys levels, how it's going. That's what I did use. Let me see. And then if you want to chart it, if you want to add a chart for this, you can literally put it here and it'll chart for you the same way it did for me on the other screen. So here you would have a chart now or whatnot to help you kind of see the levels of that contract. Or you could just use a regular chart and link it to that option like I have here, and I'm able to see it. So if you don't want it to be consumed here all the way, you can definitely do that. Okay, does everybody understand Active Trader now and fully comfortable setting up and potentially trying to use it?
Shorty, I think, well, for me personally, I use Webull, and they just started doing that type of thing, so I'm gonna have to try to figure that out. I think they call it like ladder options or something like that.
Yeah, honestly, I've never been in Webull. I'll have to look it up and see if somebody from the Discord that's using it. Yeah.
Cyber Techie knows how to do it.
Yep.
Yeah, maybe
we'll get him maybe to do a class on that. We'll have to figure out, maybe Catching Rockets can do a poll, see how many Webull users we got, see if we can help you guys with that. Okay, but everybody comfortable with this? Guys, this is really, really important that you get it.
Yes, sir.
Okay. What's next on the agenda? I think we talked about the active trader. Quick shortcuts. I think we hit some quick shortcuts, and then you guys know that we use like POCs and whatnot. Some of the stuff that users and other people have helped me. If you click on rectangles, what I like to do is change the date in the end to be like 2023, and it basically just keeps it extended forever. Trading View, as you guys know, has the option like extend right, and it basically goes on right forever. Toss, you have to use these other ways to get to it, and that's one of the ways that I figured out that works, right? Just right click on it, change the date to 23 or 24, whatever year you like. It basically extends it on forever. What else do I have that I use that's kind of simple? So the drawing tool we covered, the active trader is really, really important. Then on the trading, remember I talked to you guys on Friday, I said pay attention to the SPY options that are coming towards the end of the day. And I don't know who did, but here's the options that came in for towards the end of the day. Let's see, let me close this. So here is at 1401. Look at the puts that came in. You guys see the order that came in at 401 right here? I'm looking at the time here. I'm under option times and sales. And here it's telling me that somebody bought March 18, 407 puts, 6,400 of them. And if you do the math right, 6,400 times 285, he dropped him $1.8 million, right? On a 1 week option on SPY. And then here's a guy here for March 14th. This guy's funny. He bought 470. He's just trying to double his money here in the morning. You see this literally right before the last second that you can trade. He bought 1,000 of them at 470, 1,000. So basically $1,000. Okay, this is really useful towards the end of the days, especially on Fridays. That's what I was telling you guys to look at, just to make sure that you guys are seeing what's going on. So here, somebody's also expecting maybe a rally towards the end of the week or next week. They bought 12,000 of these at what, $12 or what is that? Not $19. 12,000 times 19 bucks. So 230K right here on this drop. Not a lot, but you can see mainly. I just want to make sure you guys are following. You see the puts that came in here, 390 puts, 407 puts, and this was a spread here, and you can tell here was a spread. So most likely, what do you guys think happened here?
He's hedging.
How?
I mean, do you want me to answer?
Yeah.
Sure. Yeah.
He bought cheaper puts that have a shorter expiration to hedge his call position.
Okay, but what is the spread exactly? These two, what is the spread? What kind of spread is it? Yeah, there you go, Blue Sander. He bought the 407s, he sold the 390s. Correct. So he bought the 407 puts and he got credit on these. So the difference, he paid 210 for these. He does not think SPY is going to go below 390 this week. And he's not probably going to hold it for the whole week. He's just hedging his position in case that he has some collateral in case it drops. But same case here. You look at these, holy crap, like March, he bought them deep in the money, right? 440 puts. He bought 5,000 of them at, $2,000. That's a lot of money, guys. That's $10 million right here. I see that. And then another one that came in at 403, 405 put, I mean, this guy put in some cash right here. And that's one of the reasons why I like to look at it, you know, before the close, because this is a $5 million order here. And then there's another order here, and I don't know if they're different orders. Looks like different buyers too. But huge order. This is $10 million right here. Okay, so that's how I look at this. And then the option statistics here, it tells you, right? And what you have to know and think is, you know, where sequences OI script comes in and all of that. Once all of these puts, right? If you look at the puts, right, we almost like 2 to 1, 4 million puts traded versus 2.6 calls. If you study this a little bit, eventually, when these puts, and we could figure that out based on the week, the expiration, which is most likely 318, the heaviest of this, and we can get sequence to run some stats. If we were to look at these, how many of these are expiring this week? So usually what happens when the puts are expiring this week, what do you guys think happens to the price as the puts fall off? It means the price is going to go higher. As the puts expire or are being sold and recovered, there's potentially a squeeze that's going to happen, kind of like a gamma squeeze, that we're going to go in and people are going to start covering and buying more shares, especially if the calls are moving in price. So those short sellers that start covering keep their delta neutral. And here you see, you know, the bottom section tells you the delta that they're playing with. Majority of the puts were in the, you know, between 0 and 20 here. So it tells you a little bit more, you know, how they're being structured in terms of puts versus calls. Okay. So it's kind of it's good to get familiar with this, just so you guys can understand it. And then on my trading grid, not trading grid, I'm sorry, in the options, on the option chain, you guys know you can change this here. This is the setup that I like to have. I like to know the last X, what was the last price that I was traded at. So if I kind of go here, I'm able to see the last was at 364. The bid and the ask is here, the first thing. Then I have the IV, I have the delta. I usually like to buy something, especially now that these are a little bit inflated. On SPY, I like to buy between 25 and 40. So here I'll probably go for the 422s, let's say if I was playing. And then it kind of tells me the open interest, right? So the open interest on these was, let's say 3K, and you have a volume. That means, you know, a lot more volume came in than we had the contracts available. So there were some net new positions being formed here on the call side. And then if you go on the put side right here, and if you look at it, right, so the open interest for 410s was 23, and the volume hit 65,000 here. And then if you collapse this, I'll just kind of give you some tricks. So it kind of tells you so if you look at SPX, for instance, let's see, for SPX here, it gives you, I don't know if this one looks accurate now. I don't know when it calculates. Here, if you look at on Tesla, it'll give you the percent change here. So $64 is the expected move on Tesla for the week of March 18th. You guys see that? Like the plus minus 64. We don't know, of course, which way we're going to go. But from here, they're expecting a $64 move for this week. And you can kind of like honestly chart that, right? So if you look at this, let's say Tesla, if you look at Tesla right here, and you know we're at 74, let's say 64. So let's say this would be like 850, right? If you look at that, that's the expected move for the week, somewhere around here. And you can, let's see if I can go back. You can put that and chart it. Expect to move based on volatility. $60 here would be around 730-ish, let's say here. And you can mark those levels. It doesn't hurt to have the level on it. And you can say expect to move for the week. So that way you know, hey, is the price going? What's the chance of price going to I don't know, I'm just throwing numbers out, to like 900. Well, there's probably not a lot unless something major comes out, Elon Musk dies or he moves to Mars. But this is the expected move based on the options on the quantum level. Okay, does that make sense? Did I bore you guys to death? Okay. How do we find, does anyone know the rule of 16? Does anyone know a rule of 16?
I don't.
Okay. So the rule of 16 says whatever the VIX number is, you divide it by 16, and that's the percent move you're going to get on SPX and SPY. So if you divide, let's say it was 32 here, you're going to get a 2% move on SPX. And if you think about it, we've been getting SPX moves. So for instance, here it was at 32. So what was that? Was that Thursday? Yeah, that was Thursday. And if you go to SPX on Thursday, so the high was here. You go, let's see, you go from here to here, and what do you get? Like 1.6 here, and then all the way up to here, which was 1.4. So you got very close to that 2% movement that they're referring to. And here you got a little bit more. So that's why the rule 16 is you take the VIX, whatever that is, divided by 16, and you get the number of SPY or SPX that's going to move. Okay.
Is that
VIX,
something that you try to figure out like right at 6:30 at open, or is that something that you'll just use throughout the day? Like say it's halfway through the day.
I usually do it at open.
Okay.
Yep, I look at the VIX.
And that's 2% in either direction, or is it split in half?
Either direction, right? It's
Okay.
also the drawdown, including the drawdown itself.
Cool, thank you.
Yeah, so that's important to know, because if you know the expected move for the day, and let's say we know the initial balance of the day, and this is where you kind of start, adding things on to make sense, right? So here, what is this? Tuesday, we went as high as 37.52 on this VIX, and we went as low as 32.79. That's a pretty decent size swing on VIX, right? So let's say if you use the 37 divided by 6, what would that be? 37 divided by 16, I'm sorry. What, 2.31, whatever. So 2.3% on Tuesday, right? So if you go on SPX, and this is Tuesday, yep. So here's Tuesday. I'm just going to delete all this. So here's Tuesday, and if we grab this guy here, and I did that too fast, I wasn't even able to catch it. So there goes 2.86%. So very close, right? So if if we know that 2.6% here, you can start to look for rejections, right? So here you had the responsive buyer step in twice, right? You had him come in here, and this said the initial balance high, right? So we're in a typical day right here. And we're still, if you look at this level, so since Tuesday, we haven't been able to really break it and close above it. So it becomes a fairly important level, and we know this was what, 42.99 something that rejected. So we know this is the range right now that we are in, right? So, and we haven't tapped the bottom here. So if you look at it, we haven't really tapped the bottom of this range to see if the responsive buyers are going to be playing, right? And that's what I was showing you guys Friday on SPY. I believe is that I think when they broke a certain level, I told you they were going to be going to the low of the day, which was 423, and then we said the 420 was next, and it tapped all of those levels. So that's how it helps, right? If I know the range, the how much it's going to move, and I know what type of day we're having, then I can plan my trades, whether it's orb high rejection, whether it's orb low rebuying, because I know the responsive buyers are with me. That's how my brain is wired. I'll look at all the details that we have, whether it's buyers, sellers, the type of day. And then I'm like, okay, well, I know we've had resistance here. We know the move is expected about whatever it was, 2.6%. We hit 2.86% on the drawdown. There's probably not a lot of chance that we're going to go 5% on the day, because that would be pretty, those are significant days in the markets. You don't get a lot of 5% days, if that makes sense. But did I just sound gibberish, or everybody's understanding?
No, that makes a lot of sense.
And that's how my brain literally works every day. And those are the steps that I take to look at it. Okay. I think this is it for TOS, unless you guys have specific questions on TOS itself. Just the TOS setup, how to work it, quick shortcuts. That's it for the TOS setup. Then we can go into the next topics. Okay, well, if you guys are comfortable, I'll move on. Next, we'll go into the clouds, and I'll combine it with the full send. Okay, what I prefer that you guys do for full send is look for some kind of resistance or support when the full send shows up. We've had a couple of good ones, right? I mean, we'll go into the clouds first, and then combine it. We'll remove all the Tesla stuff. We'll redraw it probably tonight. We'll do a little watch list to help us for this week prepare. So if you look at this, right, you guys know the clouds that matter, right? If you're on TradingView, you have access on TOS. You will not have these on TOS clouds, but they're fairly accurate and comparable. It's just the TradingView 4-hour clouds and 4-hour candles close differently than ThinkOrSwim. So it throws off a little bit levels, but both work well, believe it or not. Both are very accurate, and they're within a few percent off, not even few, but minimal. So with that being said, there's something I call primary cloud, which is my daily cloud here. Then I have my 4-hour cloud on the bottom. And then if I increase this time frame here, this is my weekly here. Right, so this is my 4-hour cloud, this 4-hour cloud, daily cloud, and the weekly cloud. And basically, these are your Keltner channels. So a lot of you guys use Bollinger Bands, or maybe used Bollinger Bands before. Bollinger Bands rely on standard deviations, while Keltner channels are using ATRs, average true range. So it figures out the true ranges of the day, and then we plot these levels. It's a little bit of custom code, figure out where stuff is going to bounce or reject. Okay, so, and then the whole strategy that I have is built around these levels, along with supply and demand zones that you guys are familiar with. And then you get something that's open cloud, closed cloud, right? So if you look at this, let me go on 1 hour, it looks a little bit better. So if you look at this right now here, you guys see the bottom cloud is closed on Tesla, correct? So the top cloud is shaded light, the bottom one is shaded dark. So this one means closed. So the potential for this one to bounce right here is pretty high. Meaning once it hits 767, and you guys see what happened before when the cloud was closed, it went from 783, it went all the way to 864. I'm pretty sure a lot of you guys will like that trade, right? Especially if it comes here, we see the histogram, and I gave you guys this divergence MACD, so everybody can use it. It'll plot out divergences on different time frames, and it's something that I pay attention to as well, right? So if you see here, there was a divergence being formed from here to here. Once we came, we had a bounce. But if you look at this specific chart that I'm on, and I'm not trying to go into too many details, but we'll use this one as a study for the type of trades you can take off the clouds and how to read them. If you look at this, right, so Tesla had, reached the daily top. That's what daily top means. It's when it hits the daily top. The inside line of the cloud is called 1.5. The outside line is called 2.0. And that's just the average true range, the displacement of the clouds. Okay, so we played two basic levels here. You can play bullish and bearish. There's backdoors and there's money shots, right? So here we rejected, we went below the clouds, and if I was to go back in time, I would probably find that it bounced somewhere off of the weekly mid here, or some level that triggered it. Then what happens, right? When the price goes below the clouds on the bottom side, and it comes back inside like it did here, there's about 95% chance that it's going to come back and touch this cloud here like it did, right? And you guys see the perfect tap on it, and what do we call this play? When it goes below the clouds, comes back, touches it, and then it continues to touch the middle line. What is that called? Drew, you can answer.
That's a bullish money shot.
Yep. So this is our bullish money shot right here. Price went below, and now it's going to reclaim a key level, the cloud, and it's going to continue, and it's going to go. And here on 4 hours, you're getting full send. It's pretty much telling you there's a strong chance we're never going to go over this daily mid, that we're going to come back down as soon as it hits. And if you kind of plot it here on a full send, your full send never got taken out. So if you got in here, let's say about some time, like 2 weeks or a week, because I'm on a 4 hour, you want to buy time on 4 hour full send, you're more likely to come back here and hit the bottom of it, and that's where you should get out. So the time frames on full send, just to cover those, on 4 hours, if the full send shows up, you need to buy at least 2-3 weeks time to make sure you're protected. So if you got it here, which was Monday, you would have been pocketing next week quite a bit, right? I mean, you would have went from 950 to all the way to 830. I mean, that's $120 drop. So if you bought those 120s at this time, I am pretty sure that you could have, 10 times your account right here on Tesla. 4 hours, dailies, you want to buy time. You need time on your contracts when the full send shows up. Okay.
Shorty, what's your settings on the 4 hour? Is it just deep 1 hour?
So I do 180 days, 4 hours. Is that what you're asking for? Sorry, I don't know if that is the time frame like this here. Did I lose you guys?
No, I'm here.
Is that what you're asking for? 180 days, like these time frames?
Yeah, that was what I was asking, because I was trying to figure out the 4 hour, on mine.
Yep. And you just have to think, right? So when you're setting up your full send, if you got it, is if you use it, right, you can have different variations of 5 days, about 15 minutes. If you do 10 days, now you just double the data that it uses to calculate the full send. You're the input, it just gives you the output. So you kind of have to play with it. These work well for me. I do suggest maybe do 10 days, 10 minutes also as an option for the full send. 5 days, 10 minutes, pretty good. But just think, how many candles you're going to have in 395 minutes that you're trading per day. You can figure out some of the logic and math behind certain time frames, right? I do like using, and I don't know why, but my time frames sometimes disappear. So I do like 10 days. And here, if you want to do 65. So I do like using this one a lot. And you guys will probably see me use charts, and you guys are asking why it's doing that. I think I posted why. It's basically the division. It's a perfect division of an hour and a 390 minutes. And this gives me a little bit more confidence when I'm trading on 65 minutes here.
Hey, Shorty, I had a question about the clouds.
Mm-hmm.
Or more something I'll look into. It feels like sometimes you post about like the 4 hour snake or the 4 hour clouds, but I've compared them sometimes to the time when you would post them, and they're like almost $1 off on TradingView. But the daily, the weekly, and the monthly seem pretty close. But yeah. The 4 hour seems to be like the biggest difference. So
yeah, and there's no way to fix it. Yeah, there's no way to fix it, because the way TradingView calculates the math of the 4 hour candle is totally different. I don't know if Sequence is on. He can kind of elaborate more from the developer side, but it's totally different.
Okay, I just wasn't sure if there was any like offset that you recommend.
Yeah, we have the offsets that the Sequence was playing, and I think he applied it, but you have to apply it to all the stocks individually, right? So if you're using it for SPY, or I don't know if what you trade mostly, you can find the offset, right? We can post that. We can kind of help you calibrate it. If you tell me, I trade these stocks, so I can give you the levels, and then we can figure out the offsets. That way we can have it for each individual stock, the offsets that you can play with. And I think Sequence is, kind of posting right now the offsets that he's using. There you go.
Perfect.
that's
That's what I was about to ask because I mostly trade SPY, so that's like the biggest one. I was curious what the
yeah,
opposite
you
everyone
could
uses.
definitely do that. And SPY on a 4-hour on trading view hits better than a 4-hour SPY on toss, just so you know.
Oh, okay.
Yeah, it's more accurate on trading in terms of trading. It's more accurate than toss. Daily, I mean, they're almost identical. They're always a few pennies away between, but they're very, very identical here. Okay, so that's the bullish money shot that I kind of showed you guys here. Let me go back to the time frame. 30 minutes. So that was a bullish money shot here. Then you also have a bearish money shot. What do you guys think a bearish money shot would look like?
It breaks
the
the
top of
top
the
cloud, and then when it comes back down through the cloud, it'll retest the bottom of the top cloud and then go down.
Exactly. Yeah, it's fairly simple, right? I mean, here, but you definitely need the price to go kind of above it. And lately, we haven't really had many, what I want to call like runners in the top clouds. Most of them have been the bottom guys. But here, let's look at VIX here. So this would be considered a bullish money shot here. You guys see that we went below the cloud, and then you guys see the retest. If I was to go a little bit, time frame wise, let's change this. Give me more time, just for purpose of illustration. Okay, so if you look here, you guys see the rejection right there. It came inside the cloud, and then cloud came back down. Usually what happens is wherever the bullish or bearish money shot happens, you can target the midline to be your target. So if you knew that, right? I mean, there was a bearish money shot occurring here at 30 on VIX. It dropped all the way, and you guys see the almost 3 perfect taps before it broke it. 1, 2, 3, and then it broke below it, right? So this is a really good setup anytime you see a bearish money shot, and you want to know the targets, right? So let's say you're getting in. I hate to use VIX here, but the only thing that's been going up. What you would do is you would literally just put this, and what I mark it as, you guys probably seen, I'll put daily mid, and this becomes my target, and it becomes a hard rejection for coming up again. So if I look at it here, you guys see that we kind of struggled here. The mid was moved, and you guys see that it rejected, and you guys see how many times it hit the mid and is dancing around and not able to get up. And then again here, it hit the mid, came back down a little bit, stayed above this trend bar, and then it came back. We had the full send on this time frame, and then it's hitting the top of the dailies, very close to it. If you extend it from the day before, I'll look at that as well. Kind of hits it perfectly, and then hits the mid, goes back to the top. And it's basically just playing ping pong. And here goes another bearish money shot. You guys see it? Came back in, boom, and then it's going to go back to the top, and you had the full send here, which you can trust. What I usually do on time frames that are longer like this. What am I on? I think I'm on 65 minutes still. So if I go on 65 minutes, that candle has to be taken out for me to take it. So that the candle of the full send, I'm waiting to get in. On smaller time frames, if I'm scalping, let's say I'm using, I don't know, 5 minutes, and I'll switch to SPY here for a second. I'm not necessarily do I have to wait for the full send, the candle to be broken, but you can. My stop loss becomes the top of that candle. So if I got in on the full send on this one, which was by, I guess, what time frame was this? At 150, it was giving us a full send on actually candles here. So the 2 ways you can play it, or there's a couple of ways you can play the full send. You can play it below that candle, which is a professional way of trading it, right? Then in correlation with our orbs and confluences and stuff that we do, you have the daily pivot there, and we know that daily pivot's been crucial for SPY. It's been bouncing between a daily and a weekly here at 433 for some, for a day or two. So you want to look at that, right? You want to pay attention to kind of surroundings. So here, it bounced off the daily pivot here. I would probably wait here to break and then go in, and then my stop loss becomes the full send top side. Does that make sense on the full send? On smaller time frames, whether you're using 5, 10, or 15, I don't suggest you use like 1 minute. I mean, you could use it, but I definitely don't suggest you use like 1 minute. 3 minute is the smallest as you get comfortable to use. but not more than, I honestly think you should use 5, 10, 15. So here's 10, and you can tell here, once you broke this level that this was a go ahead for shorting, and then 15 minutes, 5 days, 15 minutes, same way here, it didn't show up at all, but you had a couple of full sends elsewhere, like this one here was a nice full send. So same way you could have played it. You go above it, your stop loss is right here, and you go with it. And then, let the trend bar, you can definitely use the trend bar to guide you in the trade. I hate when it does that. So once you get in, the trend bar stays green, and you have the daily mid as targets. We always have targets with the system that we preach, whether it's VPOCs, whether it's intraday orbs. You can't say you don't have targets or top or bottom side, because I would definitely disagree with you. I think we have the most targets of any group that I've seen, and that's the key, is that you plan your trade, know where you're going to trim, know where you're going to get out, and just respect it every day, and you're going to grow. So that's the bearish and the bullish money shot. What do you guys think the backdoors are?
When it bounces off the bottom cloud.
Yep, so it can bounce off the bottom or the top cloud, right? So let me find one. A lot of stuff on 4 hours been just playing kind of ping pong here. So we bounced here. So the way this would work, let me just kind of give you a scenario on SPY. So if SPY, you have to use your imagination for a moment. If SPY was here and it broke the cloud here, what usually happens is that it will come back to this level right here, and it will reject and kind of make a new lower low. So if this was the low here, this is your structure. It will most likely be the first target here. If it breaks, then you just kind of, if you don't have any levels beyond that, then you can just literally use this to chart it and figure out where your 127, 1618 are off of that move. But that's a bearish backdoor. If the price was, I'm just suggesting, comes here, comes back, that's where most likely it will reject. Let me see, on weekly, probably have some. So here's a mini backdoor here. It came back, and you guys see how it touches the kind of cloud perfectly. It hits it, and it literally dropped, and it did not take out the previous low here, as it was at 413.93. So that's something, that you as a trader have to kind of get better at taking profits as you happen. So if you shorted here 421 all the way to 415, if you didn't take profits in that range, then we have bigger issues than targets. You have greediness issue. And
Hey, Shorty. How long do these the backdoors and the money shots usually take to develop? Is there like an average time, or is it just kind of?
Well, it depends, right? So on weekly clouds, you see that it can take longer because I'm using also different time frames. So on a weekly cloud, they take a long time. So for instance, on a weekly cloud here, if I zoom out, I mean, this can be days, sometimes even more, maybe months. So here's a weekly cloud since March 20th, right? So here's your March 20th or 10th, whatever, and you see here, how long it's been adjusting. So here from daily mid, from 1220 to the top of the weekly cloud to 1.4, kind of gives you the time frame that it takes. So from top of the cloud 1.4 to the bottom, took it 20 days from top to bottom here. So you can think, the stronger the cloud or the higher the time frame cloud, the more time it takes. Your intraday cloud is your 4-hour cloud, which is this guy right here. And this guy can happen. You can get top side and bottom side backdoors within 1 day. And this is your intraday level clouds that happen. So here you see went below, came back inside, bullish, touched the middle, came back, bullish money shot right here, went all the way to the middle line, broke it, came back, retested, and then went to the top. So it completed a bull cycle on a 4-hour chart. So from here to here, so I guess from Tuesday to Friday, it completed a bull cycle on the 4-hour cloud, and it hit perfectly to the top side. Now it's probably going to go to 417 on Monday. Does that help answer a question, or did I complicate it?
Nope, that was perfect. Thank you.
And when I look at clouds, I look for confluence always. So the daily bottom is where 417.41, the white level right here, right? That's my daily bottom. Then I have my 4-hour bottom is at 417.09, right? Which makes sense. We have a little bit of confluence there. And then I have, you see that if I look at, for instance, here, my backdoor on a weekly is at 421.68. So what you can expect is if you look at the levels, let's say Monday, and you want to kind of see the theory work, you can put this as a weekly bottom, right? And I would check this level in the morning because it's probably going to recalculate, but on a weekly level, probably not a lot. And then, potential backdoor. So you put this, okay, sure. I'll just put this. So if I put this, right, I know that there's a potential backdoor here for a bearish backdoor. If it hits here, rejects, boom. And then inside, you have a gray line here that you can also use for a backdoor. And usually what happens is if the price goes inside the clouds, this is the second level where it's going to reject or test it. You guys have that gray line in TradingView as well. And you see here, came back inside, and where did it bounce? Right on that gray line here multiple times, tap, 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 and then went below it. And then once, remember I was telling you guys, once it breaks this weekly bottom, we're going to get a nice little play, and then it broke it, and it went, $2 below that. So that's kind of how I use it to look at it, right? And then on the bullish side, the backdoor would be something like this. Let's see. Let's say if this price here, just imagine, went all the way up, we're getting news, the war is ending. Most likely it would come back to the 4 hours. And on intraday, when you're trying to day trade, this is the backdoor that you're looking for. You're looking for the 4-hour backdoor to happen here, and you buy it, and then you can use the gray line as your stop loss, or slightly below the gray line to be your stop loss. So if you're thinking about it, right, so you're risking here 433.11 and you're 432.21. So it's not a bad, you're risking about 80 cents on a trade. And if you buy contracts, you can even risk a little less if you like, but you're looking for 2-to-1, 3-to-1 trades, so you can figure out where you're going. So you need a $3 move from 432 to make that trade work. But you manage that, right? But that'll be the bullish backdoor here. Okay, on the full send, touching base on that. So the full send, as you guys saw, it has a bunch of code in it. It uses a lot of logic in terms of CCI. It uses even a little bit of some logic on EMAs, right, on the crossovers, as well as the supply and demand zones. So if you guys go to the, the settings here, on this one, where is it? It's right here. So if you click on the summaries, you'll get this. I'll show the studies. Let me not do summaries. I'll do this. You'll get these little clouds that are created here, right? So if you're still, if you have these, you have probabilities that are aligned with this. So if you click on your globals, it will tell you that your high probability full send is right here, based on the colors, right? And the medium probability, if it breaks this line, you're getting a little bit less probability. So you can use this as your stop loss here, or find the middle of that line, right, the cloud or demand zone, and put it right there as a stop loss. But you see here, once it's showing up that, you're in a high probability setup, that, it's probably best to take it long. And depending on time frames that you're using, I like to use, like I said, 5, 10, 15, 30 minutes, 1 hour, 4 hours daily. And the higher the time frame, the more conviction you have on the full send itself. So here you see the full send showed up. I'm on 30 minutes, and it's flipped, right? So it's a high probability setup for the downside, with the yellow line being here. So if you took this trade from, let's say, full send, I guess 424.91 was your stop loss. Did I just lose all of that? Nope. I think I was here. Yep. So 424.91 was your stop loss, and it went all the way down to about 420, so about $5. Then you had a little full send here from the bottom, medium probability. and it went up a little bit, not as strong. So that's pretty much how I use the full send. I don't try to overcomplicate it. If I see it and I see that it's in the high probability area, or if there's a VPOG below it or above it for a short side, it kind of helps us kind of take those positions short or long and confirms our, I guess if you want to call it bias for a position that you're going to go short or long. And it's mainly based on Elliott waves, and I think sequence might have given you slightly wrong information, but the fifth wave is the most impulsive wave in the Elliott waves. You know, the first and second are fairly short. If you look at the third waves, the third wave is one of the longest waves, right? It should be the longest wave here. So maybe I'm not numbering them on this one. Let's see. Okay, so here's the first, second, and this whole thing was a third wave here. Now you can expect the fourth, and then a quick fifth, quick fourth, and then the fifth, you know, to give you a full flush down, potentially on this. And the resistance, major resistance that the system found was a 352. I would not be shocked if we come back to that point at some point here. But you guys see something here on the weekly, just want to point it out. You guys do have the script. From here, from this level right here that I'm highlighting, do you guys see any like histogram positive on the weekly at all on SPY? You guys see how it's literally disappearing. And now we're picking up momentum to hit the March 28, right, levels. So this push, this here, December, whatever that year is that I can't figure out here, maybe 19, yeah, 19. We're over that level now on the strength, right? And then if you look at the drop right here, from here to here, we had, what was this, 21 drop? And if you look from here to here, where are we? We had 14% drop. So we are on a higher scale, histogram-wise, on this drop right here. You guys see it? Compared to here, I do think we have another 5-6% drop on SPY coming. So some things that I look at, right? Any questions on full send and the clouds?
On the green box right there, Shorty, you were saying if the yellow line is on the bottom, it's a medium probability.
Yeah, if you're taking a trade from, let's say, full send is showing up here, it's more of a medium probability than if the full send was showing up here to take it, right? If the full send was right here, that's great. Here, you know, it's a middle of the cloud, kind of 50-50 split on the probability itself. So that's how I read it, right? So the yellow line is medium probability, green one is high probability.
Okay, all right.
The green box moolah is based off of our full send script that some people got from me. And some people were interested for me to cover it during the call here. That's the only reason I'm covering it right now. And you can change these colors to whatever, you know. And on the bear side, you want the green side to be here, not the yellow, so that way you can take the trade short. Okay.
If full send can't work on TV, are you going to ever do another TOS offer for people who might think about changing over there?
Yeah, potentially. It just depends on how much interest we get, and it helps for the training of it, because if I get 1-2 guys, it makes it a little bit harder to train and educate. So we'll probably do one in July and see if people are interested.
Yeah, because the thought of it, like, if it worked on trading, it would be great. And I know you and I have chat about it in the room, and you're like, no, it won't work with Pine script.
Yeah, it is just very, I mean, if you look at the code in this thing.
So it has me going like, well, crap, maybe I should just go.
Yeah, I mean, there's about 1035 lines of code, and Pine script does not have the same syntax on some of the stuff and call outs and the loops as ThinkScript, and it makes it almost, and it would be super duper slow if there was a way to do it.
Yeah.
We didn't give up yet. Sequence still looking at options, but Pine script is like almost like a kid's language right now.
Yeah. I mean, as I said, I'd be almost like, forget it, flip to a new broker just to use it because it looks so good.
What do you use? What's your broker now?
E-Trade.
Yeah, I don't know how E-Trade. I've never used. I mean, I
E-Trade's charting flawed.
Yeah.
I mean, the only advantage with E-Trade is I've been there long enough. I pushed them down to like 40 cents a commission.
Yeah, and if you have, some money coming into toss and you talk to them beforehand, they'll honor you and they'll match it.
Oh, cool.
Hey, Shorty, for those areas for the full send, so you know how like the full send will move with the candle sometimes?
Yep.
So
it's a lagging indicator. So
yeah, so when that box gets drawn, does that box shrink or grow in size as well, or is it mostly just the candle that will move?
It's usually the box will stay here. The box stays and the candles move.
Okay, so
this box will not move.
So when the full send closes, it's kind of like your indication of like how good it is to hop in on the next candle.
Exactly.
Okay, perfect. Yeah, that makes sense.
Because that's what I was talking about earlier. Like if you waited here, for instance, right, this is your full send. It's telling you we're in a high probability setup on this candle. Me personally, this would have been the stop loss. I personally would have gotten it, as I saw it. Multiple reasons, why, based on the levels that we have, psychological, and I'm pretty sure we had something on 425-ish level from VPOC. So all of those things combined, I'm like, okay, well, I'll just get in here. I'll put a stop loss. If I lose money, I'll lose 10% of what I'm putting in. But if I win, there's a high chance I'm going to pocket some money. So that's how I trade it. And the box should not move, especially on the higher time frames. It should not readjust.
Sounds good. Yeah, because I've watched some of them where like the candle on the full send just keeps moving over. But
so the full send uses a confluence of items to tell you there's a bear side, and of course we have manipulation in the market, right? So can they manipulate stuff? Of course. Can they manipulate an indicator that uses their some of their logic on how they determine their algos? Yeah, of course they can, but the higher the time frame, the less they can manipulate because you have more data to calculate. Like, that's why I suggest 5, 10, maybe 15 minutes to be the base in the beginning until you get comfy. And those boxes should not move that much. It's basically drawing a supply and demand zone for you here.
Yeah, because on Friday on SPY there was a 30-minute full send like right at open, and I kind of waited one candle, and it was full send going long, and Friday we pretty much like dumped most of the day, so
okay,
it's just kind of interesting to see. Like I didn't have the boxes turned on, but knowing kind of where that candle is kind of will give me more confidence on like how early I should hop in, because I know like when you send the instructions, just kind of turn it off because there's a lot of noise, but knowing that that's how that works is really helpful.
Yep, no help. But yeah, definitely have, look at these boxes, look at the colors, and then, full send above, below, use those candles if you want for entries to make sure you don't get faked out. But and just know the price action, right? I mean, if it's showing a full send and let's say it was showing a full send right here for the bullish side, I don't know if I would take it because I know I might not play a full position. I might get a few. I know a weekly pivot, monthly pivots here. Some major resistances above it, then you have to be cautious on what it means, because it doesn't know any wars, it doesn't know any feelings about anything else. It just knows systematically what it's seeing.
I'm glad you went over that box because I've been using it as a supply and demand, like you said.
Oh yeah, it's golden, honestly. If you use it, and I know Katudi, I saw you using it in 1 minute. I'm not a big fan of 1 minute, usage on it, but if you're comfy with it, definitely use it. But minimum 5 minutes that you guys should be on.
And yeah, then, usually for the 1 minute, it's like if that lines up with a couple other ones, I'll probably take it.
Yeah. And for people that I know some of you guys like, some of you like swinging and whatnot. The trend bar, and if you back test it on ASCII candles, trend bar above, let's say on 30 or 15 minutes, is actually not a bad spot to be going long on swings or short. So for instance here, what is this? I don't even know what day would this be, a Tuesday? It's Monday. So SPY went below the 15-minute trend bar and turned red here at 10:15 at 428. And I mean, if this turns red, there's a high chance that you can swing it into the next day, that there's more blood coming, And here you would probably get out at 416. You can use the 15-minute trend bars for swings, and it's pretty good. So here it's telling you, I don't know, this is post hours, but it went red, and you just have to kind of align the timings, right? Because you can't trade, post close. But here it went below on the trend bar. Even if it goes below it, you can take the entry, especially if it takes out these major wicks here. So in 15 minutes, you can definitely use this for swings. And I know people that just use it for swinging in 15, 30 minutes.
Did you say when the trend line breaks or when the trend bar?
You can do it both ways.
Okay.
You can do both ways. Preferably, if you're safer, let it turn red, green. I would play it on the breaks, but I would look for the VIX, especially on Ashi candles when you have something like this, where it's a bunch of wicks together. I would definitely wait for the VIX to break, and then you take it long here. If you took it long here, that would have been trade. So it's just a matter of finding something that works for you. And the reason I'm giving this to people, like the ideas, is to build your own system, right? Whether it's orbs, whether you're using, let's say, 2 minutes Ashi candles and the orbs. Here's the break of a trend bar here on 2 minutes. You can go short, and then you can switch to 1 minute and be like, okay, well, I'll just get out, as soon as it kind of breaks above it. And here, 1 minute, 1 minute. Not a single close here, candle above it. So look, you got in here, 431, and you got out here at 420.4. That's pretty good movement on SPY and contracts, right? So you just have to find, with all the tools that we're giving you, you have to find your own model and kind of put the rules around it, put the strategy in it, and live by the rules and the strategy of what you define, and I think you'll be profitable. Earth has his own, setup and his probabilities and how he uses it. You hear him, he looks for the 90% setup. And you can definitely replicate or try to replicate what he does, but you also have to develop your own style. What he does will not make sense to you, and you will not know how to use it. So the best thing you can do is use your own style. Use what you have, set up your levels, use the trend bar, combo, set up some rules and back test it and see if it works, and then start using it.
I know a lot. He's been doing that a lot during the trading day, and something that I've been able to join. But is it possible for him to maybe just go over some of that sometime, like on the weekend? I know it's kind of hard, maybe live, but it's like really interesting how he trades just the option contract sometimes.
Yeah, I'll talk to him, but honestly, it's the best when he's doing it live.
Cool, thank you. Yeah, I'll try to hop in one of those times.
Because you're doing we can probably record one of the sessions when I think somebody did record it. We'll see if he can post it. But you honestly have to define what you're doing and make your own strategy. Incorporate, the teachings, whether it's from Earth, me, or somebody else, but put it in your own logic and your own rules.
So, Shorty, it was recorded, but it's only audio.
Oh, okay. Yeah, so we'll look to record another time when he's doing it, see if we can help.
That would be awesome. Thank you.
Yep. Okay, I think we covered a lot of stuff. What else do we have? I'm trying to find announcements.
I had asked Sequence if he wanted me to ask Earth to go live, but he said just capture the audio. I was like, all right.
I'm sorry?
I had asked Sequence if he wanted me to ask Earth to go live, but he said just record the audio. I was like, all right.
No worries. We'll figure it out. Earth here stays. So if you guys like what he's doing, you can definitely do it. But I do suggest you make your own strategy of using it. So we covered the clouds. I think we covered the full send. You guys want to talk about the fibs, different levels, or
yes.
You guys don't care?
Yes, please.
All right, perfect. So the way you can, I was just looking at this for my IRA, see if I should wait for buy more or less. So when I'm looking, for instance, on something like this, right, to buy shares on, or if it's options, what you're doing, I'm trying to find the structure of the market first. So I'm seeing here that it had the bottom. You know, this was a great buy at $13 back in 2008, not just because of the equity, but it's more about the dividends that they do on this particular one. So I'm trying to find where is a good level for me to kind of go back in and add more. So if I'm looking at fibs, right, there's multiple ways I can find, you know, the levels of support, levels of rejection, and see what's going on. So it's making higher highs on the monthly chart, right? I see that. So this high here is the highest high, which is important. And if I wanted to look at where this level is going to replicate and what are the key levels from this area here, from here to here, if I want to know where's the 61.8, where's the 50%, where's, you know, I even have the extensions, the 127 on fib retracement, the 1618, where do they line up? It's fairly simple because this is a fairly big swing, right? It took out the previous high, which was right here. This was your previous high right here. So this swing took it. So for me, this swing is fairly important. So if I wanted to find the levels of support, these are the levels of support that I was looking at earlier, right? So for me, you guys see where it's bouncing, right? Perfect bounce off of the 50%, and it's respecting it super nicely. 61.8 is right around 59.69. So for me, I'm looking for support from the bottom to the top. I'm trying to find where's the level of support where it can bounce. So it really did not respect much of this. You know, I don't typically use 0.236. 382 is good. I usually use 50, 61.8. 78.6 I've used before, but you know, I'm kind of shied away from it. I don't use it as much. The 127 and 1618 are the only ones that I use. So here I'm looking from this swing to this swing. I'm trying to find where's the fib support. So 50 has been
time frame on that one, Shorty.
This is monthly chart. I was looking at monthly higher time frames, and these fibs would take time to play out, right? But if the case it breaks the 659.69, then I know, well, we're getting a little bit of a pullback more than the typical 50, 60% that we are accustomed to. So this one, you know, it dipped all the way below here, and you see it like it created a new low from here, right? So there's a high chance that this is going to be headed in this direction. And how do I know that? Well, it's something that I mentioned that I'll talk to you guys about it. Let me see. So if you look here, right, from this point on, right, if I'm looking right here, this is the order from here. It started driving the whole market up, or this stock up, Realty Income. So from this indecision candle, there came an order that was fairly large size and it triggered a buying. So what I like to do is usually the smart money, what they do is they will come back, the indecision candle come in here, and that will act, this area will act as the demand zone. And if you wait for it, like I will in this stock, patiently, I will place an order for 51.5 or maybe like 51.9. I will wait for it to come in here and I'll buy it. But I'm going to click on the order and forget it good till canceled, and I'll be willing to be a buyer at 51.5 here. And that's just basically what I was showing you guys or mentioning to you guys. I'm looking for the point where the explosive move happened on particular stocks. So if you're looking, and this is monthly time frame, these are huge demand zones. You see here, there's a couple as well, right? From this red candle, there was a huge order that came in and kind of drove it higher. So even if I go in here, you see that there's multiple demand zones lining up to be at this level here as well. So I could either put a 51 or I can put another 47 and split the order in two. And that's what they do. The smart money, the big boys, that's exactly what they do. Is they look for the points of breakout and explosive moves and they basically wait for the retest. And the same thing can be said on the upside, right? If I know that this is explosive move that triggered it before the sell-off, you guys see this candle here? Well, this becomes my supply zone because after that, I mean, it literally dumped. And that becomes my supply zone. That's just quickly what I was talking about Friday that I want to show you guys. And we'll find more examples on smaller time frames. Fibs wise, it's fairly simple. I'm looking for support. I can even use the previous low here that I had, right? The lowest low and the highest high. And I just grab the bottom to the top And here's my fibs, right? It's unable to break the 236. If it breaks the 6488, high chance it goes to 5952. Then it has 54. Then it has this 0.786, and then the major fibs below the extensions, right? And you can do this on any time frame. Monthly time frames, they take, you know, more to play out. So let's say you want to find something, you know, intraday levels. Let's see, I think, okay, well, this one is fairly charted. I'm not going to do this one. The video. Okay, good, the video. So if I wanted to find, for instance, this level here, I'm looking at this swing here that took out previous, you guys see this pretty much swing here. It took out previous consolidation here multiple times and then kind of struggled to keep it above it. So if I wanted to know what are the levels of support and resistance on this, fairly simple. I'll just grab the, you know, the low and the high of this. And here, it lost, you know, was not able to break the 232 here or 3826 fib. The 50% was broken. Then it broke the 61.8. Most likely headed to 216. Once it breaks that, I would not be shocked to see it at the previous low, which would be 206. And then it has 198, which is, I believe, a domain zone off of the VPOX. Does that make sense so far, or am I losing you guys?
Yeah, it makes sense.
You said that zone is the candle prior to the move, the top and bottom of that.
The smart money, yeah. Usually you have the smart money. They watch. You watch the candles. So let's go on 65 minutes because I like to do these in 65 minutes a lot. So for instance, if I look at this right here, you see that there's a couple of X and you see these indecision candles. So for me, you know, to make things kind of easier, this would be the kind of the demand zone that you can expect to bounce, to come back and bounce from. And look what happened here. Came back, got a bounce. And even if you buy right here, right, you have a strong chance that you can make some money all the way to 2046 result. And then same on the top side, right? You're looking for candles before a big move happens. So like this one right here, I'm just grabbing this little inverse hammer that you're seeing here. And it looked like a bear setup. And here it came back and it rejected. But then if you scroll a little bit to the left, you see this big old candle here. Right? So if I look at that one, watch now. So the more you look at the price action, the more it'll make sense, right? So here you had the biggest red candle of pretty much from here on. You see it, right? There's a huge red candle. Like not a single big red candle in that one. So the indecision that I have here on these prior ones is what I target as my supply top and bottom. And you see here, every time it came back to it, you could have shorted it all the way down. And that's, you know, if you look at any Forex traders, like currency pair traders, this is pretty much the only strategy they use. They look for big candles prior to the move, like this one here. They would circle this one and say, anytime you come back to it, I'm gonna look for a short, and they put a stop loss right above the supply zone of shorting. If long, they would put probably stop loss somewhere right below, and here you probably would have gotten stop loss right here. But does it kind of make sense what I'm trying to explain, or? So like even here, if you're looking at this, right? So I would grab a bigger zone, and this becomes my zone for the retest. You break this, you're coming back here. And this is complementary to our VPOX, because the VPOX and POCs become your demand zones. If you draw your, you know, the standard deviation of the volume profile, if you draw it on, it's definitely going to work. Let me find something that I really don't trade religiously. I don't trade Google that much.
Really quick, for the volume profile that you shared in TOS, does that need to be adjusted in any way like it does for TradingView, or we just use it as is?
So if you're on ThinkOrSwim, we can bring it up here. So this is what I do. Value area percent is 68%. You want to keep that at 68%. So that's basically your, if you look at this, it's this area here. This to here is the 68% of the volume that I'm looking for is between this area. And then your volume profile, if you want to adjust it, right? Some of you guys said you can't see stuff. So if you adjust these to be a lighter color, like this one or something, you'll be able to see these a little bit better, I guess, here. You can change it to have the volume profile show differently. And here you'll be able to see quickly the gaps on SPY, your value area low, your highs. But yeah, only adjustment 68% that I have.
Okay, cool. I just want to make sure we didn't have to change like row or tick size or anything like that.
Yep, no, nothing. I don't mess with that. Okay. So same with fibs here, right? So if I'm looking at a 65-minute chart, I see that this is, the lowest low and this is the highest high. So if I wanted to chart this, I could find where's the next support and resistance, right? So they had a support here at 38.2, which is a pretty good fib. I don't like using 0.236 at all. When you see here, when it dipped below, it struggled. It dipped below the 50, it struggled. And it, abandoned baby island right here. And then 61.8, unable to break it, went off to the 78.6. Now, if it decides to break this right here, if you draw a trend line, if you connect it, you can expect a bounce on Google to go here, and then you can look for a short opportunity. But that's pretty much how I use the fibs. And then if you want the targets to the upside, right, how would you do it? If you want to know where's this move going to go next, right? So if I want to know where's this headed next, you can use, let me find 1-day chart so it's easier. So let's say I was looking to see where this move was going to go, this from here to here, right? Because I'm just looking at a nice swing that took out previous consolidation, which was kind of around here. You see a huge box consolidation, and now you're like, okay, well, I missed this move. You could look for support, and then you can look for targets, right? So for support, bottom to the top, and you see that it held the 50% almost perfectly, right? This retracement, this is basically people, they made money, and now they're selling. And usually 50% is a good buy level, and 61.8 are really good buy levels to go long. But if I wanted to know where are the targets, where it's going to go, you grab the fibs from the top to the bottom. So if I wanted to replicate this, now I know my first level, the 1272 that you guys know that I use a lot, is the first target that I would do, and it kind of hits perfectly here. Your 61.8, obviously you can see that it's fairly important. It hits, comes back, hits, comes back. It's stuck non-stop on it. Then your 272 seemed to be the top for it so far. It hasn't been able to get over it. And that's just using one swing here. In between, you can find many swings here, on different time frames. So if I wanted to know from this swing to, let's say, this swing here to this swing and find the support, fairly simple. You just grab that, right? You grab this to this, and it's telling you the support. So it's below the 61.8 of this swing, which is pretty bearish, right? If you're going to long on something, you want the last retracement tool to show you that it's above 61.8. So if I go here, so, you definitely want it to be above the 61.8 to take this long. So, 2696 or even 50%. If it goes over 2696, high chance it goes to 50%. Then you have some, opportunity to go long. And then let's say you get in long and you're like, okay, well, I want to know where it's going to go. You just flip it. Here you go. So here are the levels. If you go there, then you would have the levels where you're going. If you grabbed it off of the 2696, 2760, 2824, 295, and these become your extension levels right here.
On these plays, are you looking more at shares, or are you pushing out like 1 to 2 month option swings, or just
so here, perfect, like good question. In this market, and there's the way we are behaving. You guys saw that we were up on futures last Sunday, like 2.5%, 2%, and then we dumped. I mean, it's so hard to swing and not take profits when you have them. That me right now, I don't swing. But if I was the market stabilized and the war or whatnot happens, let's say that this is approaching 26.96, I would want the daily to close above it, right? I would usually wait for the retest of these levels because as soon as they break, they tend to come back to them to make sure that they had the real buyers, right? So here's your 236. Look what happened. They broke it. What did they do? They come back right to it and it sends it. And same thing here. I mean, if you look at it, it broke your 382, broke it, came back to it. You short it here. You know, you can go long here, put a stop loss, and look, it broke through this one. It goes to this, comes back, retest, rejection, and it just repeats all the time. So if you're going to buy contracts on something like when I'm using the daily fibs, you need time. You need, like you said, 1 to 2 months to buy further out contracts. The longer the period, like if you're looking at, let's say, weeklies here, if I was trying to chart this and I'm trying to figure out what's going on, where is this going to go? So if I look at this, I'm like, okay, well, crap, you know, it's rejecting the 50, the 60. Now it's below the 78.6. You know, you're 100% right here. So short, can you short it below this? Yeah, 26.05. It'll probably go to the 100%, even though it's not a fib. And then you have the targets below it. So once it breaks this 100%, you know, could you swing some on Google here? Probably yes. But you need to buy time because we're in a weekly time frames and they take, you know, they can take months to play out. These are major fibs. And if you look at this, I'll give you a scenario how much time you need. So pre-COVID high to the COVID low here. So if you bought it here, for instance, I'm just saying, you're like, okay, I'm going to buy it as soon as 236 is reclaimed, I'll buy some swings. So this was March 30th, 2020. Look how long it took it to hit the 61.8. You see here? So we're talking about April.
10 months. Your January.
Yeah. So you have to, the longer the time frame you're, you know, charting, it takes a long time for the rejections and whatnot to work. So that's, I guess that's my point. The longer the time frame, the more it takes. Weekly, daily, 4 hours. They usually need between 4 to, you know, 6 on 4, and daily you need between 4 and 8 weeks. On weekly, you obviously just saw that it can take 10 months to play it out. And then if you're charting something, you know, if you're charting on monthly fibs, these are major levels. Like I'm talking about like super big levels. And when they approach, you're going to get a strong bounce or whatnot right off of it.
Different kind of question, and only because you got Alphabet Google up here.
Mm-hmm.
What's your thought on how it's going to change trading wise once Google and Amazon go through their 20-to-1 splits? Because it seems like only Tesla is going to be the only big dollar, you know, moving stock left of the tech sector.
So it's a good question, right? And especially what happened in past, I would say 10 to 15 years, you know, you have UI of Robinhood where, you know, you can get a 18-year-old to jump in and buy some options. And, you know, when you don't think about it, this 18-year-old has $5,000, and how many 18-year-olds do we have that they hear FOMO of Bitcoin or option trading and they all put in their money? It throws off the game a little bit, and, you know, the hedge funds adjust. They adjust to the game because they see the inflow, you know, they have to hedge a little bit better. So when you get a stock that does a split like 20-to-1, what they're doing is they're seeing a trend of retailers buying. The perception and the value of the company really does not change, right? Google is still whatever the market cap is, whether it's 21 or 100-to-1, it's still the same market cap. But the perception of the value for a retail buyer changes, right? Because now they can afford it. Like, right? So this stock, I guess Amazon is the latest one. So what it was, the highest was, you know, 3,800 or whatnot. Not many people could have bought that from perspective of, you know, let me buy 10 Amazon stocks. But now that you're giving them the ability, I think a lot of retail, once the split happens or once they find a decent price, they'll hop in and buy the shares of Amazon, and they'll look to drive it up, you know, of retail. But it could be when you look at this massive chart here, why do you think Amazon did the split right here?
There's definitely a block there at that 3,700, and they were just kind of in a sideways trend as you're drawing.
So if you think about this, right, for me, this is a distribution phase right now that it could occur, right? So you had accumulation, and this could be reaccumulation as well. If you think about the Wyckoff theories, right? So here you have this consolidation and a pop, and Amazon's been consolidating for how long? I mean, since August 20th, right? And we're almost 2 years, and it hasn't been able to break this range. Usually these ranges become the targets, right? So it seems like if I was to measure this quickly, if I was to measure this is 23%. If I was to measure from here to here, it's about 28%. And you see it's close enough, right? On this one. And then your targets to the upside become whatever the zone is consolidating, which is, let's say this is close enough. This would be the levels. So for me, right, and you see how they're defending this level that I drew here, 28.82. They're defending it with everything they got. Every time it drops below, they brought it back inside. So to me, it looks like that it could be a reaccumulation phase for Amazon here, that it's occurring, that especially now that they split it, they are going to get a new level of buyers. I mean, will I be a buyer? Of course. Why wouldn't I put in, let's say, $10,000, $140 share? Because if it's, let me just do the math, right? Where are we right now? 29.10 divided by 20. So $150. I mean, I will honestly buy Amazon and forget it for a little bit and let it grow. And that's what they're anticipating, is that they're going to get a line of buyers to buy it at 140. And even if it goes 37.66, that's pretty good money for an investor, right? I mean, if you think about it, 37.66 would be what, 190 equivalent to the split. So if you buy at 145 and you get it to 90, and let's say you buy, 10K worth at 145. I mean, that's pretty good money that you made, right? So you multiply by 195, so you made, about 4K on your investment, which is good, 40%. So I do think retail is going to step in here and drive a frenzy. But if, I have crazy theories that as every trader, you should have some. If this turns out to be like more massive war than we are seeing now, because now I guess U.S. is getting bombed in Iraq by Iran, and the different powers are showing up. China's friends now with Russia, and China wants to invade. All of that can play a role where this gets pushed down to here, and now instead of buying at 145, you will get the opportunity to buy it at 100. And I'd rather buy it at 100 than 145. And we know from previous experience, Apple has done these splits too. I think, when did they do a split? Is it this right here? Yeah, right here. And you see when they did the split, it went up right here. So it went up to 138.24, and look what happened that month, to 103. I was a buyer here on Apple. Actually, I think I might even get a better price on this. I was a buyer here for Apple. And usually splits, they will drive the price down, and they will revisit. But interesting chart nonetheless here on Apple. It looks like it wants to go to 138. Does that help, or did I go off the tangent for you?
No, it does. I mean, I'm kind of wondering also, because Amazon and Tesla and some of those really ultra high dollar value stocks, there were different trading range. When you're looking at options that are contracts that are $5,000 a contract, basically. And I'm wondering, are we just seeing kind of the end of that era, so to speak? And these companies are kind of try to be more level based for like what you're talking about, retail traders. Obviously Amazon, you're going to get an insane amount of volume added to it. It's not going to be like Chipotle where it's super high and there's no volume. But just kind of curious on, like, other than Tesla, do we have anything that fills that $1,000+ high volume traded stock anymore.
I just think they're adjusting. You know, the companies, the CEOs, they know Warren Buffett's got, I don't know how much, $33 billion worth of Apple when he bought it. It's sitting at 150, 160 billion now. You know, how many of those ultras are going to take their money and put it in Tesla right now at 5,000? I don't think Warren Buffett would do it ever, right? I don't think he will take 5 billion, 10 billion and invest in Tesla. Those big boys, they buy low. They're most likely not going to touch a lot of these stocks because they were buyers way long time ago. Like if you're looking at Amazon, I mean, or Apple here, I mean, these are post-split, but they're buyers when nobody else was buying. I mean, you see here, like all the way to like $7, $8 they're buying. I mean, if they put billions, they're good with money. They're not going to add more. Now they're just collecting dividends.
Yeah, I mean, Warren Buffett was probably buying Apple back when Microsoft saved the company.
Exactly. So he's probably part of that deal. Same way, I don't know if you guys who remembers, but like when Warren Buffett indirectly bailed out Bank of America. I mean, he was getting preferred shares for, I think it was, don't quote me on that, I think it was like 70% off the common stock value. So he bought $10 billion. I mean, he literally few years back, as the economy picked up, he was able to make 70% back and preferred dividends and everything on it.
He was also the secret investor that saved the Washington Post back in like the 80s when they got hammered post because they are the ones who released the Watergate tapes.
And just think about the patience that he has.
No one wanted to invest or use media on them, and they were bleeding.
Yep. And just think about the patience these people have with big money. You really think he's going to go buy Amazon like Warren Buffett or any of the big hedge funds? Hell no. They're not going to be applying it. They're not going to be buying any of it. They're expecting retail to help continue drive the price. And the big boys are also just sitting in a corner waiting for a bigger pullback to buy something. You know, there's a lot of, value stocks or tech stocks that have been beat up. You know, you look at stocks like Twilio. Okay, sorry, but like this stock was, I remember hitting almost 500 here. Everybody was like, oh my God, this is insane. This is going to 1,000. Well, honestly, it just retested the breakout level and it broke it. And it's breaking every level, right? And this is where the big boys, they load it up. You see the volume picking up. And then you see how they started kind of emptying out the warehouse here. This was your, distribution phase, kind of like right here. And they're like, okay, well, we had a lot. Now we're going to empty out this warehouse. The tax money, obviously, we're approaching some key dates. And that's where they're probably going to look to buy back in if they believe in a company right around between that $168 range. And just, thinking what we talked about earlier, the big money. So if I was to kind of do it right here, this would be the demand that I'm looking to buy this thing right here. So $116. So it has about $30 to drop. And that's pretty much how they look at it. Why buy it here when I can buy it here? They can fabricate, whatever you believe, but they can fabricate news and PR, and they have people they pay to fabricate those things for them, so that way they can get better deals. Okay. Any questions on fibs that I can answer? I use fib channels. You guys are probably familiar with that. You guys see me using a lot.
Really quick, Shorty, can you show your fib levels?
Yep. So fib levels, these are the ones that I use. I don't like using this one. I will turn this one on sometimes, but basically what it looks like is this.
Thank you.
0.382 is picking up more steam as I'm watching people on Twitter. So I've been adding this one slowly in to see, and it's been working well so far. Yep. So if you look at the, I trade channels a lot, especially as part of the, price action trading. And you guys see me here on SPY. The major trend line is here. The red one, and then we have intraday levels that I believe was set in 65 minutes. Yep. So if you look at 65 minutes, and this is what I was sharing with you guys pretty much all day Friday towards the end of the day, is these levels here of the rejections that they were coming through, and the levels, and now we're expected to go to 417. We have a POC there. We have the daily bottom and the 4-hour bottom lined up with the 417. So I would not be shocked to touch that and bounce to go higher. All right. What other questions you guys might have? No question? Any other questions? Whatever you might have, trading wise.
Rich just asked if you can explain Elliott waves.
Yeah, I mean, so your Elliott waves are based on the concept that everything repeats in the market, right? Everything goes through the cycles of 1 through 5. I'm not the best Elliott wave trader. That's why I had the system generate those Elliott waves. The Elliott waves have certain rules of the Fibonacci retracements, like it can't go past 50, 61.8. Do I know all of those? I don't, not by heart, right? So what I had is define those in the code one time, and then I no longer have to remember it. So it basically goes through 1 through 5. You have the first wave, then you have the retracement that's between the first and the second. Usually it's about 50 to 61%. The third wave is the biggest wave, right? That's the wave where you can make money. The start of the third is where you buy usually shares. Most people buy the shares on the third wave, and that's where they would get out and reload on the purchases of the fourth wave, and that's where SPY is right now. We're going to have another pump up before we truly enter the fifth wave on a weekly time frame. So 1 through 5, the fifth wave is the most explosive one. That's the most impulsive wave that we have. Third being the longest, and then the 1 and 2 are just mini consolidation waves that we have. And then, you have the contracting, you have the contracting triangles, you have the expanding triangles that you have to watch out for in terms of the waves. If you're in an uptrend, you have the major, the minor cycles. So there's a lot to it when you think about the Elliott waves. It's just that covering Elliott waves in terms of trading the Elliott waves, I'm probably not the best person, but could I trade off of them in 1 or 2 months? Probably yes. Figure out all the details and remember all the math that goes in the Fibonacci retracement coverings. So what specific question do you have on Elliott waves? Is it around the full send or? Yeah. So your wave 2, 2 and 4 are considered to be your corrective waves. So when you see the 2 and 4, that's your corrective wave. That means you're going to be pulling back. And the advancing waves are your 1, 3, and 5s. I don't know if that helps. And then, you have the fractals inside of it. When you look at people that trade Elliott waves, you'll see like the Roman numerals, like 1, 2, 3. It becomes really the art of trading on Elliott waves than anything else.
Hey, Shorty, I changed something on my chart and it doesn't show the green and the yellow line on the full send. Do you think you can help me out? Get that out when you get a chance.
Yeah.
Thank you.
Yep. If you want to share your screen, I'll help you. All right, guys. Well, if you don't have anything else, that's it for me. we'll look to see what we can come up. I'll probably hop on the watch list as soon as I figure out the timing of it for tonight, see what we can find, some major levels, and point out a few tickers that we'll be watching for the week and go from there. But I know this is going to be a crazy volatile week. 318, the Apex, you have the FMOC meeting, you have news of Ore and East and all this. So really volatile week.
You got quad witching too.
Yeah, that's the Apex. It's gonna all expirations coming through. So
week's gonna be crazy.
Oh yeah, it's got. If you think volatility is like great past few weeks, wait till you see this week. It's gonna be pretty nuts. All right, guys. Well, thank you. Appreciate it. Katudi or whoever was talking, I think it was you. If you want to stay on and you can share the screen with me, let's take a look at your script, see what we can fix.
Appreciate your time.
I just had I had my studies off on one of the settings, so.
Oh, okay. All right. Well, good. There, we fixed it.
Yeah. Thank you.
All right, guys. Have a good night, or have a good day.
Thanks for the class.
All right. Bye-bye, guys.